Thanks a lot. People have described me as the mad hatter that went back to South Africa, but I wouldn't be that mad if these projects weren't that good. They really are an exceptional opportunity in a completely ignored mineral belt. So the Northern Cape of South Africa, that's 30% of the surface area of South Africa and only 3% of the population. This area where we've got our projects has produced over 2.5 million tons of copper in the last century, and at the moment produces none. Not because there isn't any left, because it was all abandoned in the 1980s and 1990s as we went through low metal prices at the same time that government and mining systems were changing in South Africa. This is a very prolific mining area in South Africa. Vedanta are busy building an 8 million ton per annum milling operation that will produce 500,000 tons a year of zinc. It'll be one of the biggest zinc production hubs in the world. We have tied up 2 mineral belts, 450 k's apart, with a complete smorgasbord of minerals. It's absolutely incredible. There almost isn't a mineral that cannot be found on our ground that hasn't been mined on our ground. Everything from the copper, the zinc, the nickel, golds, rare earths, lithium, beryllium, tungsten, almost everything. And we managed to go in at a time when nobody was there and no one was active, and we got a first mover advantage. Tied up about 3,500 square kilometers of mineral rights, and we've flown the first high-powered EM that's been flown since the 1980s. And every hole that we've drilled on an EM target, we've hit base metal sulfide mineralization. You don't have to be a genius. It's actually very easy to do it over there. It's in a prolific renewable energy development zone. On our mine sites, we have existing renewable energy. There are ports being built close to our mine sites. We've got sealed bitumen roads to our mine sites. We've got existing water, we've got facilities, and that's the opportunity of going into a brownfields development area with known mineral deposits. So we were able to fast-track them. We picked up the best of the projects, and we're busy fast-tracking them into production. So with what we've got there, it is absolutely the best opportunity where you can practice the entire ESG across the value chain, from time of discovery all the way through to producing, and ultimately we will be producing precursor battery mineral products on site in the Northern Cape. So it's the exploration, the mining, the renewable energy, the ESG standards. We've won ESG awards for the last 3 years. We won the Australian African Mining Exploration Group ESG award. Last month, we won the Mining Indaba ESG Award for Labour Development Programs. We have become the flag bearers for modern junior mining in South Africa. And that puts us ahead. It gives us the ability to do stuff in South Africa that many of the old existing miners with legacy issues can't do. We dual listed. We're listed on the ASX and the JSE, about 4 billion shares in issue. Yes, ouch, eventually we will do a consolidation, but not until we're in production. We're not going to be doing a consolidation now because that's not going to be good for us. Our largest shareholder, Tembo Capital, 23% of the shares, very, very supportive shareholders. They really understand the geology and they've been great, supporting us all the way. The Delphi Group is a German investor group, very, very supportive again. And between Tembo and Delphi, basically 40% of our register is European-based and registered. We've got IGO on our register. Their geologists love this because the reason why we went over there is we had been very active in the Fraser Range, and then we did a joint venture with IGO over there. Their geologists recognize what we do. It is identical geology. The same age rocks, same geotechnical setting, the same the same types of deposits that you're finding over there. And when you look at the drill core, you'd swear that you're looking at drill core out of the Fraser Range. 30% of our shares on the Johannesburg Stock Exchange register. They're fully fungible with the ASX, but 30% of our shareholding is South African, 30% is now Aussie, and 40% European, and a growing European influence. Very strong board, some big names on there, Tom Ballman, ex-BHP CFO, Godfrey Gomwe, ex-CEO of Anglo Coal. So some big names, people that really know the South African environment. So the flagship project is the Prieska copper zinc mine, discovered in 1968 by the Anglo-Vaal Group. By 71, they started building it. They operated it for 20 years. They mined 46 million tons of ore, produced 460,000 tons of copper and 1 million tons of zinc. They mined that steeply dipping limb on the left-hand side. You can see the cross-section through the ore body down to 970 meters. Then the ore body rolled over and went flat. Back in the early 1980s, they had to make a critical decision. Do they put in a whole new lot of infrastructure and capital at a time when South Africa was going through big political changes, or do they move up to the Zambian copper belt? They chose to go to the Zambian copper belt, and they left us behind. We have since drilled up 30 million tons of JORC resources. It is open in every dimension. Some of the highest grade and thickest intersections that have been drilled on this ore body are on the edges of our current JORC resource. We've got downhole EM surveys that show us that the ore body continues. There's 9 million tons of pillars remaining behind. These are massive pillars. Some of those pillars are more than 1 million tons because the ore body is so thick. It's up to 40 meters thick, so they left massive pillars of ore behind. We're going to be able to extract that by putting in backfill, because all of our mining is going to be with cemented backfill. So we've done a full bankable feasibility study. This is a fully permitted project. We could go on site tomorrow and start building this. The challenge has been for a little $100 million company to build a $500 million project. But we've broken the back of it because we've actually turned it around. We did the bankable feasibility study on a 2.4 million ton per annum operation, getting in as quickly as possible into that deep ore and mining the virgin ground. But we've said, hang on, let's pull back. Let's put in a half-scale plant, a 1.2 million ton per annum plant. Let's mine the open pit that's available on surface. Let's extract some of those pillars while we dewater slower. And suddenly the capital comes down from that 500 million to less than 200 million. So all of a sudden, the financing of this project is turned around completely. And the next big step was lining up the financing. Again, a $100 million market cap company. How do we finance $200 million? Well, we've already tied up the first $140 million with a streaming arrangement. And this shows the quality of this project. For giving up 4.5% of our revenue over 12 years, we've secured $87 million of financing for this project. We've got the Industrial Development Corporation that have just finished their due diligence this week, and we're expecting a term sheet for $20 million from them. Now we've got a very small little portion of equity that is required to build this mine. It is within our means to get under construction within the next 6 months and be in production 19 months later. This is going to be a big game changer for Orion, and it actually changes the whole plan. The whole economic outlook for Orion has changed with that. So we're going to be mining that open pit that you see over there in brown. Unfortunately, this pointer doesn't work. And those green pillars that you see over there for the first 3 years. And then we get into that big grey bit at the bottom, big lazy slab of 9 to 40 meter thick mineralization. It's folded, but it's easy mining, fantastic ground conditions, fantastic metallurgical qualities. This mine for 20 years produced some of the best copper and zinc concentrates. The second project that we've tied up is the old OKIP. 100 years ago, Newmont built a big smelter in this district. There's 1,700 mapped outcropping ultramafic ore bodies. 200 of them have got copper showings on them. And when I say this district, It's a 30-kilometer radius. It's a very small little patch of all these little intrusives with copper mineralization in them. Only 27 of them have been commercial mines. Most of them, less than 10% of them have been drill tested. The first one that we went and drill tested after flying an EM survey, we discovered nickel mineralization up to 0.4 and copper mineralization of 0.8. You know, this is just walk up elephant country. This is where we're going to find so many deposits, and we believe that we can get back up to the historic production rate of 30 to 50,000 tons per annum of copper mineralization from here over the next 4 to 5 years. So we've got a bankable feasibility study underway at the moment on the central area, where we've got the Industrial Development Corporation as our partner again. We've built a great relationship with them over the last couple of years. They are 43% partner on that project. Those are the stats of all of those mines. You can read it all in the presentation yourself. Historically, this district, mined originally by Newmont, then handed to Goldfields, and ultimately when the district closed mining in 2003, in real term copper prices, copper was down at 2,200 a ton. We're now at 10,000. And there was economic mineralization in the faces of the mines the day that they closed over here. So this is just fantastic. We can drive down existing portals 150 meters below surface. We've got stopes that are drilled and ready to be charged and blasted. We need to put in a small little plant here and get into production. We've done a feasibility study on that, a scoping study on that. We've drilled the first 20% to JORC compliance of what was originally the Goldfields resource of 52 million tons, 100% conversion. So we believe that we're going to have at least 50 million tons before we even go find any new deposits. So just stuff that was previously in resource and reserve category, there's 50 million tons, and we've already started finding new deposits. Economically, it's going to cost us about $58 million to build the first little trial mining. We're calling it a trial mining, 75,000 ton a month milling operation at 1.3%. Again, this district had the history of producing fantastic concentrates, but they had their own smelter on the prospect. And we will ultimately be looking at taking this to refined metal as well. But step one is just going to produce concentrates, the same as what we do at Prieska, and we're going to be shipping them out. The third major project in the district, just 65 kilometers north of that Prieska mine, we've got a massive nickel project, big intrusive, big dikes and sills, between 50 to 100 meters thick, 7 kilometers of strike. Only 1 kilometer of the 7 kilometers has been drilled to JORC compliance. There's 65 million tons of low-grade nickel sulfides over there. Discovered originally by Anglo-American in the 1970s. Various people have done feasibility studies on it. It makes money by producing a nickel concentrate, but it's not really exciting. But with a new modern precursor battery metal production, suddenly this changes completely, and we have gone to the value add side, and this is what's really exciting us at the moment. We have identified a group of chemical engineers that were involved in operating Norilsk, where they're producing these precursor battery sulfides, battery metals, battery nickel and battery cobalt from ore like this. It's done at Jinshuan, it's done at Jilin, and we've got the guys that have built that have identified how you can do it with off-the-shelf technology and hardware that's available from the petrochemical industry. We're busy drilling the first samples now that are going to go into lab test work, and within 3 months we're going to be able to show that we can develop a very valuable nickel, cobalt, NCM producer in this district. That is the fantastic opportunity that you've got in the Northern Cape that you can't do anywhere else, and that is why we are mad enough to be there.